Hi, I'm Pierre Longosoria, strategist at Russell Investments, based in London. In today's market review, we will cover three key developments: macro data reinforcing the view that the US is entering a slowdown phase, corporate earnings, and the Bank of England's rate cut. Let's dive in. This week brought more evidence that the US economy is cooling. Last week's jobs number already hinted at softer momentum, and this week confirmed it. The ISM service PMI came in just above 50, while the prices paid component ticked higher. Meanwhile, initial claims rose more than expected, reaching their highest level in over 3 years. The broader picture is one of slowing job growth, softening activity, and lingering inflation risks. That said, our outlook remains one of a muddled-through environment. The economy is slowing, but not recessionary. Next week's CPI release will be an important piece in shaping market expectations around Fed rate cuts later this year. Despite this macro softness, the stock market is up this week, supported by resilient corporate earnings. We've seen solid results across the board, and analysts have been revising up their earnings expectations. Year-over-year earnings growth for Q2 is on track to deliver over 10% growth. However, the heavy lifting continues to come from mega-cap names. For instance, Apple, Microsoft, and Meta all posted a strong growth in both revenue and earnings. We'll be watching closely how the rest of the season plays out, in particular, whether the fundamentals in small caps begin to catch up. The Bank of England cut rates by 25 basis points, bringing the base rate down to 4%. But it was far from a straightforward decision. The vote was split 5-4 and only passed after an unprecedented second round of voting. The close call reflects the tricky spot that the Bank of England is in, trying to balance weakening growth with inflation still above target. While the quarter-point cut matched market expectations, the narrow vote made future cuts seem less certain. As a result, the pound and gilt yields rose following the announcement. We should expect every income CPI and wage print to remain make or break for the next move from the Bank of England. So that's the week in review. Signs of a US slowdown, resilient earnings strength, and a split decision to cut rates in the UK. Thanks for watching.
Hi, I'm Sophie Antel-Gibert, Head of Portfolio and Business Consulting at Russell Investments. If you liked what you just saw and heard, consider subscribing to our YouTube channel or check us out on LinkedIn. Thanks for tuning in.